Quarterly business reviews, most organizations treat them as a tedious compliance exercise. But for elite operating teams, they are the ultimate strategic reset, a precise mechanism for driving institutional value. Welcome to the Upside Journal podcast. In 2026, domestic venture capital is struggling with extended exit timelines and dry powder gridlock. Yet, a sophisticated layer of cross-border diaspora business networks is quietly unlocking predictable, counter-cyclical returns in AI and climate tech. Today, we're breaking down the hidden alpha traditional funds are missing, and capturing that alpha starts with diagnosing a severe operational failure. A staggering 72% of executives openly admit their organizations cannot actually execute their own strategies, thanks to a silent killer known as execution drift. It is the ultimate VC paradox of 2026. You have executive teams sitting on these incredibly confident board-approved strategies, yet the operating teams on the ground, they are trapped in a perpetual status meeting. 60 to 70% of management time is literally wasted on coordination, communication, and manual status tracking. That incremental execution drift goes completely unchecked, effectively masking deep structural misses behind superficial vanity milestones. To dismantle this issue, we are going to move through a very specific analytical framework today. 1. Diagnosing execution drift. 2. The 4 operational rhythms. 3. QBRs as the strategic reset. 4. The anatomy of a QBR. 5. The LATAM leadership turnaround. And finally, 6. Automating the cadence. Let's jump straight into part 1, diagnosing execution drift. When leadership teams fail to execute a hard strategic reset, they essentially create an environment of asymmetric information. You see teams just regurgitating retrospective data instead of genuinely stress testing their assumptions or verifying talent capacity. To break the drift, you have to ruthlessly separate looking backward at what happened from looking forward at how you allocate your resources. It's about facing operational reality, not just checking a box. Which brings us to part 2, the 4 operational rhythms. To systematically engineer your way out of that drift, you need a strictly defined multi-quarter cadence broken into 4 synchronized layers. Think of daily execution as synchronizing priorities and escalating immediate blockers. That feeds your weekly rhythm for monitoring progress and pipeline reviews, which then rolls up to your monthly assessment of the tactical trajectory. But the apex, the quarterly cadence, exists for an entirely different class of problem. It's designed explicitly for resetting strategy and realigning capital before minor drift compounds into a totally lost year. And that transitions us into part 3, QBRs, the strategic reset. We need to draw a very sharp institutional contrast here. A monthly business review is purely tactical. It's budget tracking, operational metrics, maybe 30 to 60 minutes max. A quarterly business review, however, is a strategic reset. You are looking at a 60 to 90-minute forum dedicated strictly to annual objective progress and hard resource allocation. Blurring these two functions is exactly where leadership teams lose their operational leverage. Let's move to part 4, anatomy of a QBR. To enforce hard accountability loops between board strategy and ground-level operations, you need a non-negotiable executive playbook. It requires 6 precise building blocks. 1. An executive summary. 2. A KPI scorecard. 3. Deep performance analysis for a financial reality check. 4. Identifying blockers and strategic risks. 5. Setting next quarter priorities. And 6. Arguably the most critical piece of the entire architecture, accountable next steps. Multi-quarter variance tracking only works when every single action item leaves that room with a named owner, a definitive timeline, and a measurable outcome. This is exactly where we see the climate tech supply chain edge right now. High-performance QBRs enforce dynamic capital reallocation. Passive observation is a luxury you cannot afford. Every single at-risk initiative brought into that review must receive an explicit decision before the meeting adjourns. You either fund it further, you descope its parameters, or you kill it entirely. Let's ground this theory in reality with part 5, the LATAM leadership turnaround. We're looking at a clinical case study of a multi-billion-dollar turnaround at Rene Confections. When Ignacio Gonzalez took over as LATAM president, he inherited severe matrix tension and team dysfunction. To diagnose this, leadership deployed the Rocket model, an incredibly structured, data-driven framework used specifically for mapping and building high-performing teams from the ground up. The data here is striking. Look at the initial team assessment survey from August 2017. The scores are absolutely dismal, particularly around norms and results. But by embedding a rigorous QBR cadence and forcing those hard accountability loops, they achieved a dramatic, verifiable turnaround by November 2018. That is the literal definition of converting a quarterly review into a decisive lever for enterprise value creation. Finally, part 6, automating the cadence. The manual bottleneck of status tracking is completely obsolete. Today, AI-native platforms pull progress data automatically, detect multi-quarter risk signals across disparate teams, and generate these executive business reviews straight from live data. This is how you future-proof your organizational operating leverage. It makes the entire repeatable flywheel self-sustaining, ensuring your executive team spends their time exercising strategic judgment rather than debating the accuracy of stale data. So we leave you with this. Will your next QBR be a passive status update or a genuine strategic reset? Capital has become highly commoditized, but the infrastructure to execute high-trust, cross-border deal flow is rare. To get ahead of these macro signals and access our premium investor network, subscribe to the Upside Journal and join our membership communities. See you in the next Daily Drop.